Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So here, much better situation compares to your currency in British pound, where we have no actually choice but just wait when market starts forming something. Because currently market shows nice downside action, but taking the short positions right now are not relatively, well, not very attractive, because market stands very close to strong support areas. As on the cable, as on the euro currency. On the gold market, we have absolutely different situation. Our intraday bullish setup is working nice, and in general, our recognition of the breaking of the bearish context on intraday charts was correct last week. So market has shown the performance that normally it should not show if it remains bearish. And that led us to just recognize this moment at the early stage, and correspondingly to prepare to the consequences. So it's upward continuation. Yesterday we talked about possible upside targets. Potential it might be butterfly, but if even it will not be the shape of the butterfly, because market is moving higher. It's still a question whether we will get the right wing or not, because here might be just straightforward upward continuation. Wherever it will be, extension remains the same, so targets will hold anyway. And the first one is 27.08. This agrees with the daily overbought. Next one is around 27.37. It's 1618 extension. That's what we see on the daily chart. In general, as already said today in a report on the Forex market, I see something, well, it's kind of the wrong performance here, because if we take a look at the dollar and 10-year bonds, they are going in opposite directions, which is not normal in quiet times, in healthy times. So we see some pullback on the 10-year bonds. Yes, this pullback is not really very significant. Might be treated as the normal, proper reaction on the big butterfly that has been formed. But at the same time, if we take a look at the dollar index, despite it was at the resistance, you do not see any retracement on the dollar. And taking into consideration the action on the gold, all of them are going up, dropping of the yields. What does it mean? It means that investors are buying the gold. Price and yields are moving in the opposite direction. So falling of the yields means rising of the price. So investors are buying dollars, buying 10-year bonds, or in general treasuries, and buying gold. What it could be is now options. Actually, this is geopolitics. Something is going on. I suspect that something is going on, just because really curious statements have been made recently from the different political reasons, from the United States and in other countries. It seems, as we already talked about, is now a vehicle report. It's a big bargain behind our current situation, under the curtain. I suppose that Middle East is involved, Israel is involved, Ukraine is involved. So lots of things to discuss currently, and that's obviously the reflection of the ongoing processes. And even in the weekend, we already have come to conclusion, especially when we talked about the Forex market, that demand for the dollar currently is not the result of some valuation of the currency, some economy of the United States. This is just the market bet on a safe haven. So they already inhabit, and that dollar is a safe haven. They are coming to it and buying the dollar, hoping that in difficult times it will save the situation. But this time it might be quite different. And there's no guarantee that dollar once again will become the winner in the current circumstances. But investors are following the historical experience and just do what they have taught to do in the universities and the colleges. So we will see. This is good for the gold market, but simultaneously this is not good for currencies, and euro currency in particular. Since this is really big fundamental background, it means that the technical support there is in something this kind. It's currently is a secondary issue and easily could be broken. That's why I'm not hurry up with the taking any long position and considering in general the buying of the euro currency. By taking a look at the intraday charts on the gold, you could see on the 4-time frame chart, we could get this local ABC pattern. It's approximately the same target, 27 even. Those who are dealing with our hand shorts now should feel comfortable. This once again shows you why the splitting of the position every time I'm talking about this. But here's a really great example. This was really good to waiting for deeper retracement. As we said, 2660 area, 2591, it was the 61 in support yesterday. It was really good conservative decision for waiting for this level, but you can see that market just hasn't reached it. And splitting of the position, taking the part here, even if you have taken 25%, 30% of your normal trading lot, you anyway have involved in this trade and you already stand in a good position. But if you have missed this, don't upset that, since we have the upside standing target, good background, good performance. You just could watch for some minor pullbacks here on the gold market and intraday charts, trying to catch some retracements, because you can see overall price action is rather choppy. Here's market where often shows at least 30% pullbacks. So another one is this kind of the retracement back to the 2665, for instance, or whatever it will be. You could try to use it. The one thing that we do not want to see, the breakout of this confluence and consequently the taking out of these lows. So in this case, it will be a reversal swing, and it will be really bad for hand shorters. While market stands in normal position in this most recent upward swing, whatever retracement it shows, that's okay. So it's bullish context will remain valid. So that in towards what we have on the gold. Let's keep watching, see what will happen.